All right, guys. Well, I want to introduce Jamie Wangler of Capital Access Program.
Good morning, everyone. It's good to see you guys again. I'm just kind of in shock. I didn't know we had a YouTube channel. Clearly, I need to start asking more questions around here. Great.
Well, I haven't really been talking too much about it because I'm kind of testing it, making sure it all works. And now I'm seeing we're getting some views. I'm sharing it. So you now know. And you're going to find
Uh,
out in the team meeting.
well, great. Everybody go like, subscribe, hit the bell, do all of the things so you guys can have all of this information. But thank you guys so much for jumping on here this morning. I feel like I tend to talk about personal finances and business finances all the time, but yeah, it is my job. That's what I do. That's what I'm good at. But today I kind of want to take it back a little bit to the basics and stuff because I know we have a mixture of who's on the calls and stuff with us. And so I really want to talk about the importance of not the difference between your business and personal finances, but why it is so important to separate that, especially when you're in startup or within the first 5 years. Okay. Um, oh, see, I'm hitting wrong buttons. Can you guys still see my screen? Are you able to see it, Nadia? Okay, perfect. Thank you. So what I want to talk about is why is separating so important? Why does this matter? And I'm really just kind of diving right in. And I'm just going to be very blunt. It is for legal protection. This is so important to you as a small business. When you are thinking about, starting up and what is included in your business and what is in your personal life, you want to make sure that everything that you have worked for in your life is protected. Your house, your vehicles, things like that. And it's not necessarily stuff that you're thinking of, especially in startup phase, because you're like, I just need it. Like, I'm starting in my home office, I do a lot of stuff in there. You're not thinking about protecting it. You're not thinking about putting your assets and stuff in your vehicle. You're not thinking about the transportation or anything else that goes along with it. But the reason why it is so extremely important to really separate that is if anything ever happened to your business, if you got an angry person, and in today's society, I hate the fact that we have this mindset of if I don't get my way and I'm not happy, I'm just going to sue. It's so easy to place blame on a business owner and stuff like that instead of people just having empathy and taking, that personal and, integrity from themselves. They would rather just be mad and be loud and shout at the world. And a lot of times, as the business owner, when they're coming back, if they're not satisfied with it, they're coming after the business and they're like, well, you did this to me and I'm going to come after you and I'm going to take you down. And that is just the mindset of people. And so it is literally for your protection. You want to protect all of your personal assets so that way, if your business does go down, your family, your life, your house, your husband, your partner, whoever, everyone is protected and you don't have to take a hit there. So it is extremely important to start that separation piece. You also want to look at it as when you're talking about obtaining funding and capital and stuff like that for your business, when you walk into a bank, if everything is commingled, that banker or that lender is going to look at you and be like, are you actually serious about your business? Like, is this a real entity? Is this a real thing that you're putting effort towards? Or is this kind of a hobby and you're just maybe doing, crafts and stuff like that? And I think about certain individuals that, operate, through Crickets and they're designing t-shirts and mugs and all of the trinket type stuff. And I'm not putting anything down on that, but when you're looking at that, sometimes when you're looking for funding, people look at those as just hobby businesses because it's so mainstream now to do that as a side hustle. The other piece of the puzzle is when you are really starting to man your books and stuff like that, when you're looking at your business funds versus your personal funds, if they are commingled and you're sitting down trying to figure out what your deductions are and stuff like that, and I'm not going to use tax terms and stuff like that because I know one thing of myself is that that's not my lane. I don't understand the lingo. I don't understand the thing. And I wish Alina was on the call so I could be like, Alina, give me all of your bookkeeping terminology. But on here, you're looking at, you don't want it to be messy. You don't want your groceries and your personal electric bill and stuff like that coming out on your, when you're trying to look at your taxes. You want everything to be neat, separated, and so you get a full understanding that here are the deductions that I qualify for my business, and I don't have to figure out how I'm going to prove that with my tax official, because here it is. I've got my checks and balances here. I've got my receipts. I've got everything planned out for it. And it is just for the worst time of everybody's season. I don't know. I'm getting ready to face this myself now as officially starting a business, but I'm going to assume that tax time is probably the worst time for every business owner. Period. So if you can do it from the start of having everything completely separated and itemized out, you take less risk at missing out on deductions that you could do. And they always talk about like mileage and transportation and stuff being one of the biggest expenses that you might see in your first couple years. Let me tell you, if I didn't think about that right now, that would be something that I would be missing out on immediately, because right now my vehicle is my business as I'm traveling to all of the different places. So do yourself a favor, take the time to do the hard work now to separate everything and be very intentional instead of being reactive later and trying to figure it out. You also, when looking at your personal finances versus your business finances, we start looking at people like Square or different vendors and stuff like that that you're going to be bringing in as part of your ecosystem that we talked about before, that business team ecosystem. And when you're looking at your vendors and lenders and looking at possible investors in the future, you want them to know that you're very serious about your business. So taking the ownership of the separation, like I feel like I'm just kind of repetitive on that topic, but it is so important. That's how you really, really know. And I know, Robin, I'm not calling you out or anything on here, but this is one of those that we kind of talk about as you look for finding your own space for your daycare and everything. Or no, I'm sorry, Robin, that's not you. I was thinking about somebody else that was on another call.
No, but I have this conversation pretty frequently, so it still applies.
But as you're like operating from home and stuff like that, it's just so easy when you're out and about and you're like, maybe you're at Hobby Lobby or something and you're needing to pick something up for your business. It's so easy to just grab your personal debit card and be like, I'll figure that out later. I'll just put this receipt to the side. And so often we get, we mom up and stuff. We get into our household role and we forget to do it. And it's life, it happens. But that's why it's just so important. And something that you can do for yourself is get intentional. We talk about interviewing the right bank to who is going to build up your team. And as you look for your business bank account and stuff like that, you're having those conversations with the personal banker, the business service team, the business lenders, the branch managers, and stuff like that. And they should be having those conversations with you about, okay, here's how we want to help you separate your information. Get yourself a business checking account, have the savings account. And I've got a little bit more info on a different slide, but having your EIN number. And if you are in the startup phase and you don't know what that is your business's social security number. That's the identification that, the government knows that you are legit. If you're operating with, like as a sole prop or a DBA with your social security number instead of an EIN number, you are really putting yourself at risk, because now that business is 1000% tied to you and everything that is tied to that social security number. So keeping that, getting that EIN number is key. The day that you go in to register your fictitious name, get all of your documents in place on the Secretary of State website, that EIN is the second piece of the puzzle that same day. Do not stop until you have acquired that application and it gives you that letter of printout so you know that that is done. And it helps you when you are looking at your accounts and stuff like that. So many times, if your stuff is intermingled, you're looking at it in the sense of, do I have the actual money that I think I do in the account? Because it's easy. Like I know sometimes I fall off of my personal budget And I'm like, it's okay. I know this is coming out on this day. I've got this paycheck coming in here, but I forget because if I'm doing my business transactions at the same time out of that, I look like I have enough money at that time, but I'm not calculating both my personal and my business expenses coming out, and it could potentially overdraw me. I'm not getting a good read on what kind of business I'm actually doing. Like, do I have enough cash flow? Am I making a profit? Am I priced properly? Like, what is the big picture for the business that we are missing because we have skewed numbers? The personal, but before I go further and kind of keep going, does anybody have any questions on that? I know this seems very like trivial and just minor, but I feel like it is so important to just be repetitive over these topics because it is so important. The baseline foundation is your finances. But if you don't have questions, that's awesome. That's okay.
I have a question, but I have a comment.
Sure,
So
absolutely,
I'm a
Robin.
I'm a couple of years into this and I still haven't separated my finances. And it's always a struggle to track things I mean, just the tracking. It's always a struggle. But when you get farther into it and you still haven't separated your finances, it's harder to do.
Hmm.
If I had started right from the beginning, keeping everything separate, then I could have saved myself so many hours of headache.
But you said that you still haven't separated them. Did you say that?
Yes. So
What
that's
do you
something that
mean?
I'm working toward.
So
All
like,
of my finances are basically fluid between household and business because my business doesn't support my household, but I still have to pay those bills.
gotcha.
So that's one of my struggles in separating things out. I do have a business account, I have an EIN, but as far as the practical application of using them appropriately, I haven't gotten that far.
Gotcha.
So I think my next step right now is to find a tax person
Okay.
who can
They
help me
always
sort it
say,
out
they always
separately
say
from
the
myself.
ABCs of your team. It's, do you have an accountant, a banker, and a CPA? Like those are those three teammates that if you don't have one, they are a necessity to find after a certain point in your business. And Robin, if you need help sitting down, girl, you have my contact info. Let's sit down, let's chat, let's help you get that squared away so that way you can continue to scale because you keep growing every time we talk and I see you on here, you always have something going on and you always have new things going on. I would love to sit down so we can help you with this because this is exactly why we talk about this. It's finding a way to, cross over, make that step and just find a way to get it done. Um, but kind of going back with your personal finances and stuff, I do want to take this back to that foundation building, especially in startup phase for your business. Even if you are a few years in, you're still looking, especially if you haven't had to focus on building any business credit at this time. And again, you're going to hear people like Mark Claypool was on here the other either last week or the week before discussing how to go about getting lending financing from a financial institution. And he even stated on his call that it is very vital to focus on your personal credit and your personal debt to income because they understand that in the beginning stages, there is no history for your business. So everyone is looking at you. You are your business. You will always represent your business. And that means your personal finances represent your business. So it's not just about separating the day-to-day tasks and expenses for inventory and stuff like that, but it's also looking at in your personal life, what does your credit look like? What does your credit score say? And I feel like it is the best worst thing that we have because personally, I hate credit scores. I think they are the worst, but I also understand in life we need a credit score unless we have millions in dollars and we can just pay cash with everything. But that's not necessarily realistic to everybody. Certainly not for me. Um, but that credit score is a number that is speaking to the lenders of How are you handling your personal finances? Are you a person that is paying your credit, lines on time? How many credit lines do you have available? Are you somebody that every time you get an offer in the mail, you're like, absolutely, sign me up for that? And now you have 10, 15 different credit lines, and now you're slowly maxing them out because you're robbing Peter to pay Paul because you can't stay on top of it? Or are you somebody that has long history? You got established, maybe when you were younger, you learned how to utilize credit correctly when you were young and you didn't go through all the mistakes that I actually made myself. And so every time I talk about credit building, I am your poster child of everything that not to do, because I did everything wrong for the first 15 years of my life and then did everything right afterwards. And I'm still working on that cleanup process. But when you have a solid baseline credit history, that allows you to maybe have better interest rates when you are looking to obtain capital to, scale the business forward. They're looking at, okay, not only do you maybe get a better interest rate in a longer term, but maybe you get more. If you're asking for 10,000, but you have a poor history, they might only look at 1,000 or 2,000 and maybe like, here's a credit card for you. But if you have a solid foundation, they're going to be like, hey, we absolutely believe in you. We see that you are not a red flag. Hey, we're going to go for a higher approval. So it's all based off of what you have done in the past. And I hate that we focus so much on who we were prior to this business, because this business venture could be something where it's helping you explore, new options for your future. This could be the piece of the puzzle that's getting you out of where you have been. Maybe you're somebody that didn't go to school and you have this business idea, but maybe you have been on, benefits, SNAP benefits. Maybe you've been in housing. Maybe you've needed other assistance like energy assistance and stuff like this because you've never been able to make ends meet. And this business idea that you have, you've calculated it. You know that you have a solid plan and stuff like that. And it's going to bring income. It just takes time, like every business does. But you're going to be judged by a bank on what does the past look like. So it's so important to separate and focus on building savings and being able to lower your credit capacity and stuff like that. Because when we really start looking at it and we start looking at your debt to income ratio, this is a standard thing in all lending processes. How much capacity do you have left in your income? Because you never want to go over 40% of your income, because if an emergency happens in life and you start maybe you have to go get a different loan because your car broke down and now all of a sudden you have to get a different car, but you can't pay off this loan and your insurance isn't going to total it. So now you have an outstanding balance over here, or you had a death in the family and you lost an income, or anything in life can cause a disruption in the income coming in. And so you never know if your debt to income ratio is going to go up or if it's going to go down. But when you're looking at those numbers, specifically on the credit side, you're looking at, okay, if this person has high personal debt, are you just doing this thing where you're not having enough income coming in, so you're having to supplement your income with using credit cards to get your daily necessities? Or is it because you actually just have a spending problem? And I will say I encountered both in my life, where I just had a spending problem because I'm like, ooh, a credit card means I have all of the money in the world. And then I also went through a stage of life where it was, ooh, I'm not bringing in enough income. I have to pay these bills. I don't want to get disconnected, so I'm just going to put this bill on my credit card. But when you use those in that capacity, you're just putting yourself further and further behind, because you're not going to be able to make those minimum balance payments. And then you get into the interest rate rat race. And so we want to keep you out of that. We want to see, are you overextended? Like, if you are overextended and you're looking to ask for funding for your business, it looks like a big risk, because 9 out of 10 times your first year in business, unfortunately, it's not me being the Debbie Downer, it is just statistics that most businesses will fail within that first year, and some are up to 70%. And so if you think about 10 businesses, 7 of them will fail in that first year because of life, because of the economy, because they didn't have their finances in a row. They were not ready to take on what they needed to. They didn't know how to break everything down and keep themselves afloat. So it does really matter. I always recommend, especially when I sit down with members who I'm coaching and stuff like that, before we start taking and talking about our microloans and stuff like that, because we have awesome programs here. But I also understand that we're just kind of a middleman, and I often want to make sure that you are prepared for the next steps. And the next steps is always looking at, funding through financial institutions, credit unions, things of that nature, because that's how you are going to scale. We're never going to help you scale to that larger end, but we can help you get there. But when I'm looking at it, when we're talking finances and stuff, I'm always asking you about your personal side. And it's not because I want to dig in and be nosy. Your life is your life, but my job is to help you get to where you want to go. And so if I'm noticing trends in your personal finances and stuff like that, we're going to come up with options. We're going to talk about the financial coaching over at FOC with our Make Me Bankable program. I'm going to personally sit down with you and be like, okay, if you don't want to go that route of having that personal financial coach, let's sit down, let's tackle this together. Let's make a game plan. Let's get some SMART goals and stuff in place. So that way we can tangibly be working towards something. Because when it comes to finances and stuff like that, it's not fun. This is not the sexy part of business owners or your personal life. It is the one that causes the most heartache and headache. A big piece that I really recommend everyone doing as you are bringing down your personal debt and stuff like that, is working at the same time as building up a savings buffer, not just for your personal life, but for the business as well. Because if you think about an emergency fund being 3 to 6 months of your personal finance expenses, like if you lost your job today, how long will you survive before the money well runs out? And now all of a sudden you're up shit's creek. Oh, sorry. But you're up a creek without a paddle because you don't have a plan. And I see that so often, because when you start building a savings account, people automatically think, oh, I've got money, so I can go spend instead of putting it on a credit card. But they didn't give that money a plan, so they think it's just sitting there. But the plan for that money is, that's your emergency, that's your livelihood, that keeps you out of the credit card debt circle, the vicious circle. So always, 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 as you're separating and you're doing this, you look to see in your budget, how much can I set aside to build that buffer up for myself? The finance piece is really, it is a mindset. And we have so many people that come on to Caffeinated Minds, and we host workshops and stuff like that. And it's all about building habits and changing your mindset and being intentional and stuff like that. And all of these other aspects of our life, we journal, we clear, we brain dump, we do all of these things. But the one thing that we really need to do and focus on is being a money mindset. Being able to switch the mindset of, I have all of this money, I'm not going to have a plan for it and just spend because it's there. When you do that, you often don't even see the big picture of, and I had to put this in here because this really made me think when I see it, is when you say your personal budget mirrors how you're going to handle your business, that speaks volumes. If your personal finances are just all over the place, do you see that resonating with your business? Do you feel that, oh, I don't operate on a budget, I've got a strong handle, I've got all of this done? if you can truly tell me that you can operate without a budget and that now you can absolutely operate your business without a budget, please tell me your secret ways and your witchery, because I don't know how that works. I don't know, because that tells me that something's going to fall through the crack. And as I have gotten older, perimenopause and the brain fog is a real thing. Ladies, like, we don't want to admit it, but it goes quickly. And we're like, we got a handle on it. No, I don't. I don't have a good handle on that. And things start to happen. You don't have that budget. You don't think have things automated, and now all of a sudden you got late payments. And so when you're looking at your business and you're trying to form a new partnership and stuff, if they're seeing late payments, they don't see an operating budget and stuff that you have in place, they're not seeing, records of, what your profit and loss look like, where's your balance statements, what does this look like? People are going to look at that chaos and they're going to be like, you seem like a really big red flag. And you can talk the talk all you want, but they're looking for the walk. And when that walk doesn't match the talk, they're going to be like, I don't think this is a good partnership for us. And you're going to miss an opportunity, because they're going to go. Your personal net worth, as much as it sucks, like you see it, and I see a big negative on mine, and that's the home ownership, that's the car and stuff like that. And I feel bad personally, because I'm like, I don't feel like I have great net worth because I got this negative balance. But that's your normal negative. It's okay to have, because that home and that car is also an asset that's being used for you. Even though you have debt against it, that's still a value that somebody's going to see. And that's that collateral piece that banks are looking for. But if they're looking at a net worth that's in the negative because you got $20,000 in credit card debt, you've got personal loans that have defaulted, you've got student loans that are absolutely just in that cycle of interest payment, and never going anywhere, you're going to look at that and that's going to jeopardize your business. It's also going to jeopardize your household as well, because it's going to put you in a bad place where that turns around and all of a sudden you're just always going to be known as the red flag. So really taking the time, and again, I feel like I know I sound like a broken record. I hear myself and I'm like, you're obnoxious. Is anybody still listening? Because I hope you have some good strong coffee, because that broken record style. But this screen right here, this is what you want to have in your business to really hone in and separate that. So you want to have that business checking and savings account. And I go as far as saying, I want you to have 2 or 3 business checking accounts, because I want one of them strictly for all of the cash flow coming in. I want your revenue. I want to see your invoices. I want to see everything going into that account, because that gives you a flat understanding. Here's how much money I have. Then my second account is going to be my bills account. And every single bill, whether it's your fixed bills or the fluctuating bills because of your vendors and stuff like that, but everything is going to go through that. So you have an actual understanding of what money you need to move in there. It's not just being taken, you're moving it, you're being extremely intentional to pay those bills. And the third account is your tax account. I don't even know. I know, like with Tijuana and stuff here, they specifically have those conversations all of the time, that when they get their paycheck in, she breaks down on the stubs, here's exactly how much sales tax and stuff that has come out. You are responsible now for taking it out of this check and putting it into the separate account. So you figure out how to get those taxes done. That's great for that platform. But for the rest of us that don't have somebody awesome like Tijuana doing that for us, we're like, okay, well, how much sales tax do I need to break down? And that's the conversation that you need to be having with your professional. Again, that is never a conversation for me. I'm going to be like, here is so-and-so. Have that conversation with them, because I do not want to tell you wrong. But you need to actively be separating that. Every single purchase that comes in, you want to separate the taxes from that immediately, and not have the mindset of, oh, I'll take it out in one lump sum later. That doesn't ever happen. If you do that, please tell me again your ways of how you make sure you get that done. But
Okay, on that one,
yeah,
I cheat a little bit. I do not take it out of every single transaction because of I'm at fairs. A lot of things come in a lump sum. I total the weekend, or I'll get my online purchases. Instead of doing that, I do it by the week. And I don't always have the time to sit down and figure out exactly what the taxes are. I have it written down for wherever I was, whatever time, but I put aside 15%. So I know that I'm covered with my cash sales and with my POS system
okay.
or online sales.
If you know that that system is working, you know that you have that scheduled time to sit down, you're still getting it done. And if that's what works best for you and your business, again, I'm just making suggestions out here, guys. It is however it works for you, because sometimes you may need the cash flow. You may have bills coming up and you may have to take from that before you put it over in the tax account. But you need to just make sure that you have a ledger that is showing, okay, I didn't get all of this moved. I've got to make this up somewhere. How am I going to make it up? How am I going to get it over there? Because the biggest piece is you do not want the IRS coming after you. Like, to me, I just think about that episode from Roseanne where they're like, dun, 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 here comes the auditors. Like, I never want that. It makes me sick to my stomach to think about it. But make sure you have a business debit card. I get kind of iffy on that, but the reason why I like it on the business side is it helps with the tracking piece of knowing where you are spending your money. Now, if you were to take my hat off and put on the personal finance coach, I'm going to be like, no, use cash. Cash is king. But in your business, for tracking purposes, that business debit card is a key player in the game, because you may forget to take a receipt, but now you've got the tracking piece, because you're going to be able to go onto your online banking and see with the debit card. I'm not saying credit card, I'm saying the debit card, and go, okay, I went and I bought X, Y, and Z at Sam's Club because I needed this inventory for this meal prep or whatever it is that you're doing. So those have a very distinct reason of having that in your tool belt. But a credit card also, when you have fully established and you've got income coming in and stuff like that, there is a way to use a credit card for a positive and not a negative. And I'm not going to go into that today because that's going to take me down a rabbit hole, because I'll do another, I'll hop on here another day just to talk business credit cards. But you also want to make sure that you have a good accounting software. And this is something that I'm going to turn to like Nadia and stuff on if you guys have questions. I know JC's got software that she uses and spreadsheets galore and everything. When you find what works for you, use that, and feel free to always come on here and give feedback for other business owners that are starting out, because what may work for you may not be specific for a different business. So come on here and let's talk accounting software sometime. But having that in place is also another key piece, because as you're doing that, that gives access to your accountant or your CPA or whatever you want to call them. You can give them access to that to where you don't have to do all this time printing and taking time. It is literally a click of a button that allows you to take your information from point A to point B. It's that time saver piece as well. But as a small business owner, something else to really look at, and I read this multiple times when I put it in here, and I'm like, don't treat yourself. I say treat yourself, and I feel like, oh, here's a treat. You get to pay yourself. No, I need to restructure that verbiage. You need to treat yourself as an employee. Now, I would love to say you get to do this right out of the gates. No, you're working for free. You don't get to take a stipend right away, because that money needs to go back into the business to keep building it. But when you do reach that point of you've got enough, cash flow coming in where you now get to take an employee or an owner draw, you need to make sure that you're putting that in the budget also, and you're putting it in your payroll piece. So that way you are physically tracking that I know I am paying myself, even if it's as little as $500 a month or something like that. I am going to make sure I get this. So that way I am setting it aside. I know that I'm doing the tax piece on that. And again, I'm not going into that because that's not my wheelhouse. But you're also able to see the true expenses that are coming in and out of your account. You want to make sure that all labor is covered. As a small business owner, a lot of times that it's just a laughable thing for us. We're all like, paying for my labor. Okay. Yeah, no. But in time, you're going to get there. That's the ultimate goal. And if you're not separating, that's why it's really important to focus on your personal budget and focus on your business budget, because the goal is to be making enough money to pay you to either scale back from your regular 9 to 5 job to where you don't need that anymore. Now you're making enough money to support yourself and support those household bills. But if you're operating just in chaos and without a concrete budget that you're sticking to and giving every single dollar that comes into your personal account and your business account, if you are not assigning them jobs, that money is going to disappear and you're going to be like, I know I had money. Where did it go? You have to treat both the exact same way. And the best way to start is on the personal, because there's less risk. By focusing in on the personal account and getting a program in place for yourself as you're getting ready to start the process or continue the process of scaling and growing, this is going to help you. And that business budget, that's going to help you see what is bringing in the revenue, what isn't, what do I need to change. I'm going to use JC as an example just because I know her business model and I know the products that she has and stuff in there and what she does with business. But if I see that I've got all my kids in there playing at the cafe, but I'm also trying to sell some coffee and stuff up here, and I've got 19 different types of coffee, but I'm only selling 3, but I keep buying stock of everything because I have it automated. And then I go back and I look at my storage count and I'm like, holy crap, look at all of this inventory I have just sitting here. You can think to yourself, in time, I'll use it. It's okay to have a stockpile. But the business mindset needs to be, oh crap, I just spent, we'll just throw $100. And I could have used that towards helping go towards payroll. But now I've got to pick up hours and not pay myself so I can hit the payroll numbers because I wasted money over here. And I'm not saying that she does that. I know everything that's happening, like with what she has in there. So it's a good example. But you have to know everything that's happening because it gets really, really easy to get suckered in. You don't think that businesses have predatory lending, but there is predatory lending, especially when you get into merchant services. And I'm going to say the biggest thing that I see this in is Square, where they make this offer to you. They're going, hey, I see that you've done X amount of transactions on here. We'd like to extend you a $10,000 line of credit. And all you have to do is every single time you swipe a card and do a payment in here, we're just going to take a percentage of that. So you can pay that back, and you're paying it back according to their timeline, their schedule, not yours. And so every time you make a transaction, you're thinking, okay, great. I just made a $30 sale. And now I know I've got $30 that I can go here, here, and here. Well, actually, that $30 sale just became $25 because they took $5 out to pay their loan back first, because they matter most, because they know where your money's coming from and they're going to get it as soon as they can. They're not going to put it off to the side. So that's the predatory lending in the business world. And a lot of times the interest rates on those loans are skyrocketed because they know it's simple, it's easy. And you may be in one of those pinches where they're like, yeah, they see you need money. They're coming at you. So when you know what you have and you have a plan for every single dollar, you keep yourself out of those riskier quick impulse decision making, because sometimes when it seems so too good to be true, it really does come out that way. And you fall down into these instances where now you're going backwards. before I kind of end this out, and I'm not going to talk a lot about business credit because this is just one of those, unless you are really scaling out. And again, I'm going to JC just because I think about, her model. If she were to franchise that out, that would be a business that would need to be focusing on building the business credit side. Because if you think about franchising, that means you're going to have multiple buildings, multiple lines of here's what I need for this site, this site, this site, and this site. That's going to go beyond what you can be doing through your personal credit. That's going to overextend you quicker. So that's when you start building the business credit. But when you're looking at, doing less, and I say less than $1 million, like, like that's peanuts or something. But I mean, to us, that's huge. But when you're doing that, like that line of business, you don't have to necessarily focus on that because you're still able to operate within the grand scheme of like your personal credit and things like that. And you're building up on business history and the relationships within the bank and stuff like that. So there is a time and place for building the big business credit, and we will have other conversations other days. But I want you to think in the back of your mind as you go forward today, and you're looking at your books and you're looking at, okay, where am I at actually currently? I implore you all to just sit down and do kind of a self audit on your business today and go, okay, am I operating a household budget? If you're not, sit down and I make one. I know we're in the middle of the month, but be proactive for November. Specifically because now we're getting into the holiday season as well, where money tends to just fly out without a real plan. So sit down, make sure that you have a household budget, but then look at your business. Get a business budget in place. And if you have questions for it, my gosh, guys, please feel free to reach out to me. That is why I am here. We can sit down, we can look at everything to make sure it is all in place. So that way going forward, when you start looking at November and you're finishing out the year and stuff, we finish out strong and we have a solid plan in place for when January 1 hits. You want to continue to build a personal emergency fund for your personal side and your business, because small things happen in life, and it is the same whether it's business or your personal. Things happen. Think about an $1,000 buffer zone to just get yourself started. 3 to 6 months seems very unrealistic, but if you break it down to try to hit 1,000, that is a solid starting point that you can grow upon, because most emergencies, unless you have some big name ticket item, maybe a stove or something like that in a restaurant style business, most things are also going to fall under that $1,000 mark. So it's going to keep you from having to seek credit card debt, instant loans, unsecured loans with higher rates and stuff like that. So work on getting that set for yourself, but go through, is there any excess things that you can cut out? What is a need versus a want in both your personal and your business? If you don't know the difference between those, let's have another conversation about that, because it's pretty baseline. You may think it is a need. A lot of times, like, I need to have my nails done. I need to have Hulu and Spotify and all of these things. Those are just wants, though. Let's talk about, is it a need and a necessity versus a want and a luxury? Does anybody have any questions? Because I know when I get into talking about money and all of that, I just keep talking and don't give time for conversation.
A question. So
Yeah.
you were talking earlier about having those 3 separate bank accounts. I've been using Central Bank for my one business checking account, but I'm kind of frustrated with it because it seems like every time I want to log in online, they want me to reset my password and jump through hoops, and it's a pain in the butt to access. So who has a favorite bank that's really accessible?
Well, first, before like you talk about favorite banks and stuff like that, how often are you logging in to your bank?
I don't usually log in often because I very specifically have that account set up. I just send my taxes over there. Whatever I'm setting aside for like my sales tax goes straight into that account.
So I will say, even if it's on your personal side or your business side, when you're doing online banking as a security feature, if it goes longer than 30 days from logging in, they will have you reset because that is just a precautionary measure to make sure it is you that is logging in. I know
Right.
it's a pain in the butt, but I am an ex-banker. I understand that frustration, especially when it was first starting. I would never use online banking because I'm like, I don't know, I don't need to do that. Um,
Mhm.
I would get
So
so
one of
mad because I
the
would
thing
get
that's
to it and
frustrating
have to
about that one
reset it.
specifically, though, it doesn't actually seem to matter if I hop on a week after I've just had to actually go physically to the bank and have them reset things for me because no one could help me on the phone.
Uh,
And then a week later, I'm still fighting with passwords.
okay.
I can't have easy access
It might
for
be
Central.
a
I'm really struggling with that.
consideration just for a day to sit down and go in and physically like talk with. I know it's kind of a pain, especially when you're extremely busy and you have, all of the different hats and stuff that you wear. It is sometimes, necessary to go in and just sit and talk with the banker and be like, hey, can you help me figure out why this is such a mess every single time I try to do it? That'll speak volumes of, are they willing to sit down and talk with you and help you through that process? Do you mean something to them that they're willing to sit down and take the time to help you through and help you understand it? Or if they brush you off, that is a sign that I would say, hey, give me all the advice. Who are your favorite banks and stuff like that? It could just be building up that relationship to help you get to that part where you've got what you want, if that makes sense.
Yeah.
Because the one thing I don't want to see happen is if you've been physically working with a bank, you've got a history built up. And that's one thing as a business owner, you don't want to necessarily lose unless it is really a toxic environment that you're in, because you are building, like I said, with repetitiveness of you're building the history and the relationship with the bank. So depending on how long you've had it there, if you were to stop and change, now you have to start from scratch again. And if it is something that is in the electronic world, these things are going to happen everywhere. That's why I think it's very important to go in and have the conversations with them, because it could just be tech headache. And it happens so often now everywhere. And I've worked at several banks and it is the same headache across the board. But you will find that it's a personal situation too, not personal you, but personal the bank. If you find that, and this goes for everybody out there, if you find that your bank is not sitting down with you and taking an interest in caring about you, A, as a business, and B, as a person, that might not be the best fit. And I'm not saying it's a bad bank, but every bank is different and every person has different needs that they want from their bank. And if you're not getting it, it is the same as if you were out there dating and trying to find your partner. Like, you're going to have things that you mesh well with and things that you don't, but whatever your standards are whatever you need, if those needs aren't being met, you treat the bank the same way. If they're not meeting the needs, it's okay to shop around. It's okay to date the banks and find out who's going to work for you, because it is so vital to have that team that you trust, your ecosystem in business when you are going through this, because you cannot and will not be able to do this alone. And you want those that are going to be there on your side, being able to be supportive of you. Again, I got on my high horse again, guys. I'm sorry. Any other questions? Robin, thank you for reaching out on that though. And I would like to sit down and talk with you more and maybe help you through some of that online banking process too.
Yeah, I may send you an email later.
Okay, sounds good. Does anybody else have any other questions or anything?
I would like to make this comment. I am one that did not organize my finances right away because I technically didn't have a business account. I was still going through some of my training and licensing for my coaching. Uh, However, I was like buying some supplies, some office supplies, just some things to get me going. So it was like $10 here, $15 here. I'm like, oh, I'll remember. And then I landed to do taxes, and I had to extend my taxes into July to get all that stuff together. Going through every statement, finding receipts, it was horrid. Just sharing that. However, when I did decide to move over, at first I did just another checking account because, again, I wasn't ready to do a business account. So I just opened up a secondary checking account and I self-funded it, and I only used the money for my business things. Well, what helped me with that is I was also able to see how much I was self-funding into the account, like as an owner investment. So that was like another side of seeing it, not just your expenses, but what you're actually personally putting into it.
Yeah. And a lot of times when you're doing that and you're putting it in from your own pocket, in the back of your mind, you're like, it's okay because it's going to my business. And then you're like, wow, I put a lot into my business and I sure would like something back.
Yeah. Yep. Yep. And now that I'm making money, I'm paying myself back.
Right. But that's all I have. So Nadia, if you have more announcements and stuff, I'm all done. Thank you guys.
Thank you, Jamie. Thank you very much. It's things we know, but it's so nice to walk through some of those details to be like, really, I got to do it. I try to follow this 2-minute rule. Like if I'm checking out, I try to upload the receipt right then and there, or take a picture of it and put it in a file folder that I have in my phone for whatever business that I'm purchasing. So I've kind of made that a thing personally too, because I'm a huge budgeter for every receipt. So I'll put it in my budget right then and there, especially if I'm using cash. I'll just go ahead and put it into my phone as I'm checking out, and I like challenge myself to get it done before I walk out of the store. So that those are some things that helped me. But other than that, thank you again, Jamie, for coming on. I know you are also doing this presentation in person, so if you guys know anyone that you guys want to send, please let us know. Other than that, we have Kristen Odell with coming to this coming Tuesday to talk about how to switch up for the holiday season and market it where it matches your brand. Kristen Odell is with Market Street Floral out of Glasgow. So we'd be excited to see you guys back. Tijuana, it would be great to have your group come in on that one. So it'll be Tuesday at 9 a.m. Other than that, enjoy the rest of your week and have a great weekend.
Great. All right. Thanks, guys.
I'll put it out there.